In other news now, the entertainment industry is already seemingly dominated by streaming giants, and one in particular, Netflix, which actually just signed a deal that could see its market share increase radically. On Friday, then, it struck an agreement with Warner Brothers Discovery to buy the legacy Hollywood giant's studio and its streaming business as well. That includes HBO Max and DC Studios for $72 billion. The acquisition then would bring two of the industry's biggest players in both film and TV entertainment under a single roof, but it could face challenges from regulators. For more, we'll speak now to our markets analyst, Jameel Ahmad. Hi there, Jameel. So what do you make then of this big mega deal?
I think initially, Erin, I'm expecting for our Netflix subscription prices to go up again next year. That's what my initial thoughts are. But generally speaking, it's a tremendous milestone for Netflix and the streaming industry as a whole. You have to consider that these are huge media labels and legacy giants, the likes of CNN, HBO Max, and so forth, that have been around for decades. And you have Netflix, which has completely taken over streaming over the past 15 years or so, and it continues to show that's the future. So I think that having all of these legacy names under its umbrellas are going to be tremendously more appealing for its global brand, solidifying its expertise and how serious of a player it is in the market world. And I think for so long, we've been talking about technology giants having a monopoly over everyday life, with the likes of Facebook, Google, and so forth. But we shouldn't discount that Netflix has become an everyday subject itself, because it is that go-to method for entertainment, and that seems like it's only going to grow in the future as well, considering the size of this deal and the massive names and brands that it's going to have under its umbrella should it go through.
Jameel, we're going to turn now to the market movement. Can you sum up things this week and how investors have wrapped it up?
It's been an up and down week, to be honest with you. We haven't really had a trend, and I think investors are struggling to see a trend. Typically, when we look at the global economic news that we've had disappointing data for the United States, specifically when it comes to some of those jobs figures on the preliminary ADP private employment report. Also, retail sales suggested that maybe we'll have further slowing down in the US economy. But we had to take somewhat of a glass half full approach, because we do know that we've just had the longest shutdown in US government history, and that might skew data. So we can't say that things are falling off a cliff in terms of momentum, but at the same time, it does point towards further slowing down the US economy and puts a lot of pressure on the US central bank decision next week. And we're seeing a little bit more risk off. Bitcoin still hasn't recovered from that significant sell-off a few weeks ago. It seems to be ranging between 85,000 and 90,000 US dollars. And we see a little bit of indecision as well when it comes to gold. So I think that historically, we look at December as somewhat of a Santa's rally month for financial markets, but we don't see Santa Claus coming around yet in terms of markets being cheery.
Finally, Jameel, we're expecting to see some rather important economic data next week. What are you keeping your eye on?
The US central bank interest rate decision, that's going to be a blockbuster, because only 2 weeks ago or so we had expectations for the US central bank to cut interest rates once again, dropped all the way towards 30%. As we have this interview now, was somewhere between 80 and 90%. Essentially, what the US central bank have always said, or said since the shutdown started a few months ago, is that they can't cut rates further in light of not having enough economic data. They still don't have enough economic data, but because we saw that market volatility and the significant shifts in sign of momentum, we've already mentioned what happened with Bitcoin and so forth, based on that risk of atmosphere, there's a lot of pressure on the US central bank next week to cut interest rates based on what might happen with financial markets potentially selling, and also with the likelihood that US President Donald Trump is going to criticize the Federal Reserve, US Central Bank, no matter what it does, and that we are expecting anytime now that the US President will nominate the new chair for the Federal Reserve, because the current chair of the Federal Reserve, Jerome Powell, is set to end his term in roughly 6 months from now, and that's going to signal that potentially Donald Trump is going to have even more influence on US central bank policy, at least vocally.